You're watching The Market Comment by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us here at XM.com. The dollar continued trading in a cautious manner, gaining some ground only against the yen and the franc, while losing the most versus the risk-linked Aussie, Kiwi, and Loonie. It seems that dollar traders prefer not to engage in large positions ahead of the FOMC decision. The market is largely convinced that Fed officials will hold their hands off the hike button this time, assigning only a 45% probability for another quarter-point increment by the end of the year. They are also pricing in more than 80 basis points worth of rate cuts for 2024. Should the committee indeed take the sidelines as expected, attention is likely to fall on the updated economic projections and the new dot plot. Recent data has been suggesting that the U.S. is in a better shape than other major economies, and combined with the inflation risks arising from the latest rally in oil prices, the new dot plot may point to a higher rate path than the market's own projections, pushing Treasury yields higher and thereby adding fuel to the dollar's engines. The Japanese yen continued sliding, with dollar-yen now trading slightly above the 148 level, shrugging off renewed warnings by Japan's Vice Minister of Finance for International Affairs, Masato Kanda. With the Bank of Japan expected to take the sidelines on Friday, a hawkish Fed may drive dollar-yen higher and perhaps trigger louder warnings by Japanese authorities. Market participants see the 150 zone and dollar-yen as the line in the sand, which, if breached, could result in action. Although the pound stood well against the dollar yesterday, it tumbled today after the UK CPI data revealed an unexpected slowdown in headline inflation and a larger than forecast decline in the core rate, which likely strengthens the view that the Bank of England is also nearing the end of this tightening crusade. Investors are now assigning only a 54% probability of a rate hike at tomorrow's meeting, and if indeed the decision is a close call, the pound is likely to extend its slide. All three of Wall Street's main indices closed slightly in the red, as equity investors are also reluctant to add large exposures to their portfolios ahead of the Fed outcome. A higher-for-longer guidance on interest rates could further weigh on stocks, and especially those of high-growth firms, which are more sensitive to changes in interest rate expectations. Growing jitters that a stalemate in the U.S. Congress could result in the fourth partial government shutdown in a decade may also weigh on investors' appetite in the following days. U.S. lawmakers have until September 30th to pass spending legislation and keep vital federal agencies running. Thank you for watching today's Market Comment here at XM.com.